Good afternoon, everyone. Thank you so much for being here today. My name is Alex Leybov. I'm the founder of Creed. Creed is a commercial real estate fintech platform. In fact, the word Creed is an acronym which stands for Commercial Real Estate Enhanced Digitally. Now, before we get into our business mission, it's so important for us at Creed to take these opportunities to first discuss our core values. One of our core values is gratitude. We have to remember, all of us at this conference today, we're innovators, we're entrepreneurs, we're business professionals, but we need to take stock of this amazing environment in which we're all operating and living. Let's look around the world for a moment. What's happening on almost every continent? There's conflict, there's mass migration, in some cases war. We need to take a step back, take a breath, and just be grateful for everything we have. When we wake up in the morning, take a deep breath. It means be grateful for everything around you. When you have gratitude, you have focus. You can focus on your life's mission and your business mission. For us at Creed, our business mission is liquidity, bringing liquidity and capital to the commercial real estate market. Why is that important? Well, I could tell you, when real estate owners and developers don't have capital, it's devastating not just for them, not just for the real estate industry, but for neighborhoods and communities in which all these properties exist. Downstream, if a real estate owner or developer doesn't have money for tenant improvement, leasing commissions, for a property repair or CapEx item, what happens? The property suffers, it becomes disrepaired. Have you ever seen a boarded up property in the middle of a block? It destroys communities upstream. If a real estate owner and developer can't refinance a loan, there's a default, potential bankruptcy, receivership. What happens in that case? The banks that are making loans, they start to default. They start to experience losses. Ultimately, that hurts the neighborhoods and communities in which those banks are located. It affects everyone. And this is not an arithmetic exercise. It's not an academic exercise. It's the truth. Look historically at the last 40 years, GDP growth year over year. Two of the central financial crises that have occurred, the S&L crisis in the mid-1980s, late 1980s, and the Great Recession in 2009, both had roots in real estate, including commercial real estate. This happens regularly. How do we prevent this going forward? First, let's take a look back at that time period. What did financial markets look like in the 1980s? We look at the public equity markets, the residential mortgage market, and the commercial mortgage market. In the 1980s, these were all, as we call it, phone-a-friend industries. You can't get any data, you can't get any information, you can't meet anyone unless you pick up the phone and call. In the 1990s, something very interesting started to happen in public equities. E-Trade, Ameritrade, Bloomberg. Suddenly, business systems in the digital world started to appear in the public equity domain. In the 1990s, leading to the 2000s, same thing in residential mortgage market. Finally, LendingTree, Quicken Loans. Consumers could get data and information on the residential mortgage market from a digital platform. And in 2010, mass adoption in the public stock market. Robinhood, $0 online trades, digital systems in the residential mortgage market. Rocket Loan, Loan Depot. Finally, there's movement in the digital domain in these sectors. And what does that mean for us today in the 2020s as we function? Did digital systems bring liquidity to these respective markets? Let's look at public equities. Before 1990, the total value of the stock market was virtually flat. After the digital transformation started, the value of the public markets skyrocketed, 20x growth. This is not a coincidence. Digital systems allow liquidity to enter into the domain. In the residential mortgage market, have digital systems helped bring liquidity? Absolutely. If you look at the top 3 residential mortgage lenders, 2 of them are digital or tech-enabled within the top 3, almost $200 billion of liquidity every year by way of these systems into the residential mortgage market. Yet for us in the commercial mortgage market, we're still using traditional systems. It's why we respond so slowly at the times of economic shock, of crises. It's very difficult to transmit data quickly and efficiently. So, is anyone working on this problem in the commercial real estate market? Yes, some groups, brave souls, entrepreneurs, working tirelessly to bring digital domain efficiencies into commercial real estate. In the aggregate, about $200 million of investment on the part of VCs and investors. Is this enough capital to get us started in our industry? Let's see. Let's pan out. By way of example, in the commercial real estate crowdfunding space, about $1.5 billion has been invested in digital systems. Yet the crowdfunding market today is only $50 billion in size. The commercial mortgage market is in excess of $500 billion in annual activity. One would think there's more capital going towards innovation in the traditional market, yet it's not. Let's pan out further. The residential mortgage market, which we mentioned earlier, had over $3 billion in capital invested on the part of venture capital and investors. And the prop tech market, $250 billion of investment capital. What most people don't realize is that the Achilles heel of the prop tech market is commercial real estate financial markets. If the real estate owner or developer is adopting technology, but they can't refinance their mortgage and their property is getting foreclosed upon, they're not able to adopt that system. It's not where their mind is at. They can't think, they can't focus. This is the biggest fear right now as we face a commercial real estate contraction, that many of these prop tech innovations won't get the attention they need from their customers. So, why is there not capital or sufficient capital going into commercial real estate fintech? We believe it's because there are several myths and misconceptions about fintech and commercial real estate and technology, and we'd like to debunk some of them here. First and foremost, commercial real estate is a relationship business. There's no room for technology. Nothing can be further from the truth. We've already adopted email, mobile phones. We include technology into our systems. Technology helps the mundane and the repetitive part of this business become more efficient. It makes the industry safer. So that way we have more time to spend on relationship and enhance those relationships. If someone tells me that there's no room for technology because of relationships, I tell them that they're not focused enough on how individual industry participants could use technology to focus on whatever aspect of this industry they're interested in. If that's relationships, that's great. Next, standardization. This industry is way too nuanced. Commercial real estate properties all across the country, different borrower types, different property types. How do you standardize it? How do you digitize it? In fact, another myth, this is already happening. Over $200 billion of lending every year transforms individual loans on unique properties through the securitization process to CUSIP-based investments by the bond investment community. Standardization already occurs. It's already happening. We just need to unlock it and apply it to the rest of the industry. Next, disintermediation. Whenever I tell groups about technology, at least half say, oh, you're going to disintermediate, you're going to cut out the brokers. That's not the case. Look at other industries. In the public equity market, brokerage firms control over $25 trillion in assets. If a real estate owner or developer has a property broker or mortgage broker working for them, they want that broker to adopt technology so they can work more efficiently and do their job better for their customers. Technology and data dissemination systems expands the tent we saw before. It brings liquidity into the industry. Imagine another $1, $2, $5 trillion of capital moving into the commercial real estate market. It doesn't intermediate. In fact, it gives everyone more jobs. That's what we're hoping to accomplish, and that's the future of this industry. And 4, climate tech, obviously getting a lot of attention as it should. One challenge is that so many industry participants think the way to solve the climate problem is to regulate the commercial real estate owner and developer community. That's not necessarily the case. Providing financial incentives is the answer. We've already seen this succeed. Fannie Mae has issued over $100 billion in green bonds by incentivizing real estate owners and developers to adopt efficiency and green systems on their properties. CPACE is doing something similar. This is the answer to the climate problem. It all starts with capital. So, to summarize, commercial real estate, capital is the lifeblood of the commercial real estate industry. If real estate owners, developers don't have access to capital, it's devastating, and we've seen it throughout the previous recessions and economic shocks. A healthy commercial real estate market means a healthy US economy, which means digital systems create more capital flows into the industry, makes for a safer US economy, and ultimately prevents the next financial crisis. That's our goal at Creed. Again, commercial real estate enhanced digitally. Thank you so much, everyone, for your time. If you have any questions, please see our booth number 1 downstairs. Thank you so much.